Broadcom earnings just coming into the newsroom. Let's take a look at what they had to say about the fourth quarter results. Adjusted earnings per share coming in at $1.95. The estimate was $1.87. Investors, whatever they're seeing here, are liking it because you can see shares are up after hours. Adjusted net revenue coming in at $18.02 billion. The estimate had been lower at $17.47 billion, so a very big beat there for Broadcom. Semiconductor solutions revenue, $11.07 billion. The estimate had been $10.74, so a big beat for them there as well. Infrastructure software revenue coming in at $6.94 billion, an estimate of $6.72 billion, so a beat again. And adjusted EBITDA coming in at $12.22 billion. The estimate had been $11.69 billion, so a beat right across so far. Adjusted R&D expense, $1.53 billion. Estimate had been $1.52 billion, so a little bit up on that. And then capital expenditure, which ends up being a key number for a lot of investors these days, coming in at $237 million. The estimate had been $153.6 million. First quarter forecast from Broadcom sees revenue at $19.1 billion. The estimate had been $18.48 billion, so an improved revenue outlook for Broadcom at this point. Let's go to Ivana Delevska. She's founder and chief investment officer at Spear Invest to talk about these results. Ivana, what metric is key? Is it semiconductor revenue that you're looking at here?
Well, thanks for having me. The two key things for Broadcom as we look into this report is going to be semiconductor revenues and networking, right? So I think the key is going to be to understand on their networking side, we already know that they're the leader. This is one of the most interesting subsectors of AI, networking. We think that's going to drive the next level of performance improvement. So that's really, we think, the core that's going to drive Broadcom going forward. On the same side, we have the semiconductor business, the XPU, and this is where they make chips for companies like Google. That's their main exposure today. And we're going to be trying to learn more about how strong is this agreement with Google and are there any risks associated with it?
Is the CapEx spending important for them as well?
Not necessarily to the extent that it's important for companies like Oracle. Remember, the business of Broadcom is relatively asset light. So they're really just expanding on their current footprint and infrastructure. So CapEx is really not that big of an issue here. It's really more in the case of the hyperscalers or companies that are like the neo clouds where they're spending large CapEx dollars. Investors are worried that they don't get ahead of themselves. But for companies like Broadcom, you can see it in the results. They're seeing the demand from across the board.
Has Broadcom confirmed a partnership with OpenAI to make custom chips? That was the discussion earlier.
Well, we believe that they're going to be making chips for OpenAI, but more importantly, the key here that's been driving the shorter-term performance has been the Google TPU. And there's been a lot of news in the media and the press about how TPUs are gaining market share from GPUs. This would be positive for Broadcom. So really, they're very well positioned on the XPU side, specifically at Google, but at companies like OpenAI as well.
As you know, investors have been dragging down tech generally. Oracle reported yesterday and was sinking today. That company we know is deeper in debt. Broadcom, what is their debt situation, and do you expect that same drag on them in a longer term?
Well, what we're seeing is very interesting. If you look over the past 3 years, companies treated the AI investment theme as one. So all companies were trading together, whether you're looking at companies that are providing services or CapEx, they would all kind of trade in line and perform well. What we're seeing right now is a bifurcation between winners and losers. Companies that provide the picks and shovels like Broadcom are performing very well because you're really not taking that much risk on the AI cycle. Companies like Oracle, on the flip side, they're really supposed to be investing billions of dollars to power the next wave. And we believe that that's going to be successful as well, but there is significantly more risk associated with it. So as an investor, I think it's much better risk reward to stay with the picks and shovels. And we disclose all of our holdings on our website. So this is really where we're seeing most of the opportunities.
Okay, so you're saying stay with the picks and shovels. Do you think investors are taking their concerns out too widely, or is there some justification to their concern about overspending?
Well, there is definitely justification to their concerns, right? Because we do want to see at some point returns on invested capital. We go very deep in the investments that we make, and we do see those returns on invested capital. So if you look, for example, for AI specifically, in the early innings, we're seeing a lot of returns coming from recommender systems. These are like AI tools that are in use today. As we look forward, the key is going to be agentic AI. Are you seeing returns on agentic AI? We're not going to be able to know that just yet because the infrastructure required for AI agents is just putting in place right now. So over the past 3 to 6 months, we've just deployed the hardware, and we're going to be looking out for use cases and how these are ramping in the next 3 years. If that proves to be correct, then all of these investments will actually be justified.
But it's a 3-year cycle, you think, for us to see results from that next stage?
Yeah, so that's basically what we expect. I think this is going to be on a 1 to 3 year cycle. The first year, plus you're putting in the required infrastructure investment, and then in the next 2 to 3 years, you're looking for the use cases to be materializing. So we're seeing early innings of AI agents being useful, but they're not cheap enough to be deployed at wide scale. So this is why cost becomes so important, and this is why the TPU has gained such big traction, because it is performing relatively well on the cost side, specifically for recommender systems.
Got it. All right, Ivana, I got to leave it there with you, but thank you for your time. Ivana Delevska, founder, chief investment officer at Spear Invest.